Welcome to Tuesday's Pip Talk. Today is the 12th of November 2019. What we have a look at today is very simply the New Zealand interest rate decision. This will be released at 1 a.m. Wednesday morning. And of course, as mentioned in our previous call, we have seen the Australian rate decision as a negative outcome. The interest rate was 1%, which was then reduced to 0.75. And what we have said before, which I'm sure you guys have catched on to now, is that the kiwi often follows the Aussie. So if the Australian dollar decreases their interest rate, usually the kiwi are set to follow. And that's what we're potentially looking at here. So let's see how this can affect the markets and how we can potentially benefit from that. Now, straight away, what we do, as always, is we have a look at the bigger pictures first and then work our way down to the smaller pictures. Now, on the bigger picture, very simply, the euro against the New Zealand dollar, we can see this formation is bullish. Okay, despite the pullbacks, we can see this formation is ultimately bullish. However, from this point where we got the reversal and then the market came down, this would, in most cases, put us into a bearish frame of mind simply because we haven't seen this bearish structure broken. Over here, we can see price came up to a structure level, but it did not break. And therefore, of course, we can still believe this has room to come down. Now, due to the interest rate being released today, and I'm not expecting the market to move 500 or even 100 pips ahead of this interest rate decision, because like I said, the interest rate decision does follow the Aussie. So what it usually means is market makers don't really have a real big move as such when it comes to an interest rate that's most likely already seen before it's even come out. So what we're going to have a look at is just the upside and downside potentials. Okay. Now, in order for the market to move considerably in either direction, up or down, the market needs to grab liquidity first. So what we can see beneath on a daily is we've got areas of liquidity below. Equal lows creates liquidity. We've got equal highs above. This also creates liquidity. Now, with that being said, we want to take into account the kiwi interest rate. Now, the forecast is that the interest rate is going to be negative. If that is the case, then what we will see is the euro go up as opposed to coming down. Now, that doesn't mean that just because the euro against the kiwi is going to go up, that it should stay going up. No, it may only come up to grab liquidity before the overall move comes down. But as this is a daily chart, we can see if it does come up, it has a lot of space to come up. And when I say a lot of space, I mean a lot of pips, okay? The move upwards is the potential 200 pip move, okay? So what we want to do is we want to refine the time, go into a smaller time frame, the 4-hour time frame. And again, we just very simply want to have a look at what this picture is showing us. And it's showing us that this was the bearish reversal was here. It came down, price never came above the bearish structure, okay? It didn't close above, which has then, of course, led us to still be in somewhat of a consolidation / bearish formation. With that being said, of course, we do have now the interest rate, which does potentially mean we may now see the move upwards to grab liquidity. So I do remember from up here, we actually sent out, was it the 16th? I think it was the 12th. I'm not sure. Let's have a look. I know we sent out the sell on this trade. It might have been the 17th. We sent out the sell on Euro NZD last month. Check the daily. Okay, here. Yeah, we sent out the sell for this last month. And if you guys are still in this trade, then you would have been able to consistently have this open for a number of days, weeks now. And you've been able to be not only profitable, but you've been able to take positions off and also add positions and hedge against the sell to catch the buyers going up as well as the sells coming down. So it's been a really good trade, especially for educational purposes. But what we are now looking at is this gray area being our kill zone. This area is our fib zone, 62 to 88%. And we do want to see price come back up into this zone before we look at selling this pair. So if the market, in light of the interest rate, just decides to drop down 100 pips, we've missed the trade. And that's okay, because like every trader should understand now, what goes up comes down and what goes down does come back up. So if you miss the first stop, there's more than likely 99% going to be another stop. And that other stop potentially will probably be a better trade than the first trade that you missed out on. So we are looking at selling this once it comes up into our kill zone area. Okay, anything before that we won't be looking for. We can see here that we've had a bearish reversal pattern, and again, price is broken above that. Prices then come down, filled in balance, and now it's come back up. So we have just really been ranging. But in light of the interest rate decision, we may get a spike up, which will grab some more liquidity, potentially above this wick here. And then, of course, we can start to see what really is going to happen. But it's all going to come down to the interest rate decision. If it is a negative one, which it most likely will be, then we should see an increase, whether it's for 50 or 100 pips, or even if it's just for 45 pips, we should still see a bullish injection with Euro NZD. So keep your eyes peeled for that. We go over to Pound NZD. Again, we gave out some instructions for our premium channel members the other week, which was a buy here. We caught the buy, and we're still sitting tight with this one. And again, okay, just like with the euro against the kiwi, this is now the pound against the kiwi. We are looking, and you can even see a nice bullish flag formation here. What we are looking for is for price to actually clear. As you can see at the moment, price has grabbed the liquidity that is here, which is why price came back down. Now we are seeing price slowly making its way back up, and ultimately areas above here would be where a lot of institutions have been able to sell from, and it will also be where they've left trades open, meaning they will have to bring trades back to that same area to close off their trade to break even before they look at reversing the market. So with that being said, we are bullish on the fact that the pound should surpass the kiwi right now, just simply due to the interest rate decision. Here, of course, would have been a perfect area to buy. But of course, we cannot see price coming down as it stands. And if it doesn't come down, then just very simply, guys, sometimes you have to wait for a setup to come. It may take 1, 2, 3, 4, 5. Hell, it may even take 7, 10 days, 12 days for a trade to come into your setup. But I promise you, once it comes into your setup, it's worth the wait. So right now, I would just advise you to keep your eyes on this pair, just to have a look at what it does. If price does break this area here above, we do want to have a look at areas above to minus 27% being achieved. But ultimately, if price breaks this area, we will most likely see a retest around the same area. So with that being said, we just want to have a look and see what happens in light of the interest rate. The pound, as you all know, has had a lot of its own issues, which is Brexit. So it's not to say that we don't see the market move up, but then get a tweet tomorrow by Boris Johnson, which then potentially moves the market right back down to where it was. So interest rates are really good to make, providing you're in the trade prior to the rate coming out, hours before. Those are usually the best times to be in the trade. And if you're not in the trade, then it's best to watch and see what happens, what areas of liquidity is grabbed, whether the market has gone down first before it's gone up or vice versa. Then the picture becomes a lot clearer for you to be able to trade that pair. So for this pair to be clear, we're still in a buy, but we're waiting now to see if price can surpass this level of 2.04365. Hence why I have my alert here. And if price does break this area, then what I am looking for is very simply to see any signs of slowdown or rejection, so that we can either jump into the trade for a re-entry or simply for a sell. But as it stands, we don't want to go against the price action on this one, and that's bullish. So we do want to be patient. Aussie Kiwi. Now this one's also a nice pair. If I just go blank canvas quickly, again, we can see the momentum on this is bearish. Okay, the market's gone down, it's pulled back up, and it's come down. And since the market dropped from this area, the market hasn't broken it. Okay, even this point of structure here, this pullback here, excuse me, price hasn't broken this area, which is a level of structure. Price hasn't broken that. So this is even more the reason to believe that we can still see a move down before we see the ultimate move up. The reason why I say the ultimate move up is because we have the kiwi interest rate coming out later today. If this was just a normal day, then we can maybe think, okay, market may come down, to as low as here before market looks to turn around. But the fact is, the interest rate is going to be released in a few hours, in 6 hours or so. So we may, so now what I would ask you guys, if we go into smaller timeframes, is where are the more frequent areas of liquidity? And when we have a look at a 4-hour chart, we can actually see areas of liquidity. The market's closest to the areas above than it is to the areas below. But when you look at this chart, for me, straight away, I can see that this has reacted nicely, either off of a 62% or a 70%, definitely somewhere within our kill zone, okay, which would have been for a buy. Here would have been, this pullback here would have been the perfect entry for a buy. And if we mark this up on our fibs, okay, so on a 4-hour, like I said, it was either 62 or 70%. Okay, almost a perfect entry, pretty much is. Okay, minimal drawdown, and this would have left you in floating profit, and you'd very simply just be watching. You would even probably watch what happens tonight with the interest rate. But with that being said, again, we have a look over here and we see another perfect entry from having a look. Again, almost touching the 70%. We've had another entry. So it's fair to say that we are looking at a bullish price action with the Aussie Kiwi. And in light of the interest rate, what I would like to see is price surpass this area, this bearish structure. I'd like to see price surpass that, retest the same area before price looks on breaking out and continuing higher. With that being said, of course, as we know, when it comes to the Aussie pairs, they oftenly move quite slow, until it comes into the Asian sessions, which we have now, which we have approached, or we will be quite soon. So with that being said, we just want to keep our eyes out for this. And, right now the perfect area to buy was down here. Now, unless price comes back to the same area, I can't see the buy I'm personally not going to jump into a trade for a buy. But if I go into, maybe a smaller time frame, if price continues to be as choppy as this, if I continue to see sideways movements, then I will go into a smaller time frame, maybe something as small as a 15-minute, and I will still see that there is an entry to be taken. So, for example, straight away I can see here, this probably was a discounted price, borderline, if so, just about. Okay, so price came an inch away from 62%. Now, the question you would ask yourself is, if your trading routine, if your game plan is to only take trades once it gets into your discounted zone, which is beneath 62%, what you need to ask yourself is, if you was in a store and someone offered you a product at 60% off as opposed to 62% off, would you still take that? Would you still buy that product? The chances are you would. Of course you would. So in this case, of course, we can't always get the accurate, perfect picture that we want. If we're only getting 60% off or 61%, what it looks like, maybe 61%, that is still, for me, that is where you've got to make a decision. And this is where I would have made an executive decision to believe that this is because of current price action, because of the formation, that would be good enough for me to still enter a trade. So I haven't entered a trade, but I am showing you guys how to enter a trade. And if you'd like to know more, you should definitely contact us for mentoring so that we can plug you guys in. But with that being said, this is my setup for AUD NZD. So I think that is it. Okay, we've got two more. NZD USD. Again, looking at the bigger picture, we can see a bearish formation. This is heavily bearish. And of course, we have our gray zone, which is the kill zone. So, price came into our kill zone a few times, which would have opened up perfect opportunities to take the sell. That has now missed, that the opportunity has now gone for the sell. So what we would be looking at, of course, is a pullback. Now, with the Kiwi to release their interest rate, and of course the dollar showing a bit more dominance, it's fairly accurate to say that the dollar is stronger than the Kiwi. And if, for example, the dollar released their interest rate and they maintain the same rate. So if the kiwi decides to decrease their interest rate, then very simply their economy is seen as more weaker than the American economy. And for that reason, we should see the NZD continue to come down and still make another lower low. When we have a look on the 4-hour time frame, we can see straight away we do have a nice area of imbalance highlighted here. And when you have a look at the imbalance, what this shows you is actually the market isn't too far away from filling this imbalance. So we may still see a move down, but eventually we can see a reversal. That reversal may just be the pullback for you to enter the trade. At the moment, there is no trade unless price can come back up to here or even 50%. If price can pull back aggressively, then we can look at taking a sell trade because at the moment, so price would need to come back, maybe fill this imbalance gap here before we look at selling. But of course, with that being said, if you have already been in this trade, then the hard work has been done. But literally for us, what we want to have a look at now is if the imbalance is filled. Most likely the imbalance will be filled in light of the interest rate decision. But then of course, we want to see what happens next. When it comes to interest rate decisions, always best to go down to smaller time frames, 5, 15 minutes, 5 minutes preferably, and just have a look at where the market is going. If we get a spike up, this would mean with a spike, you often won't be able to jump into a trade because once you've seen it happen, it's already done and gone. So this is where we would set potential orders. I'd set a potential sell order here at 0.63516. And I'd have a very tight stop loss. My stop loss would be no higher than here, 0.63673. So that's probably about 20, if that, pips that I'd be risking. I can tell you exactly how many pips that would be from here. $16 pips I'd be risking. Okay, 16 pips. And if I'm wrong, I'm wrong. But this would be just for my sake of being able to catch the sell in light of a potential spike coming upwards to stop people out of the trade. Because remember, if the picture is obvious, then it's most likely going to come down on you. When I say come down on you, I mean go the opposite way. So with that being said, we don't want to do, we don't want to do the mediocre thing, which is sell along with everyone else. We want to have a look at the trend. We see that the trend is coming down. Now we want to think about how people are going to lose their money. And the only way people who are in a sell could lose their money is by them being tapped out of the trade. And if we have a look on the chart around this area here, if you got into the trade up here and you're in all this profit, where would you put your stop loss? You'd probably put your stop loss around the gold line here. So that shows you that this, if you can understand that, and if this is where you would place your stop loss, then very simply you can understand this is where institutions would look to bring the market up to grab liquidity before they think about pulling the market right back down into the overall direction that you already had your analysis set out for. So I'll leave it there. NZD USD. We are seeing a stronger dollar at the moment. That's replicated on the DXY. And with that being said, of course, we do want to see the imbalance filled. And of course, when we have a look at the structure, as mentioned, it's heavily bearish. So we'll move on to the last pair, last but not least, NZD JPY. Now, again, we look at the structure. The formation shows us that it's bearish, okay? We've had a nice decline here, and then prices tried to come up. It hasn't really done much. It's tested the same area. It's come up to this area of structure and come back down. And then ultimately now it looks like price is starting to slow down, turn around and come back down. That's on the weekly, okay? If we look at the smaller time frames such as the daily we can see a bit more detail of consolidation here. And then if we go into a 4-hour, the 4-hour can also show us that actually, although we've got consolidation, price is still ranging in between. Okay, price is still moving, making higher highs. Well, it's made a higher high until it hasn't, and then price has started to come down. But ultimately, we are still seeing this area here respected until we get to around here. Again, this candle here, these two candles here are buy to sell candles. These candles have grabbed all liquidity and then taken the market down in the overall direction that most people would have had their analysis for. So that's why we have to be patient. But what we can see, again, with the with the yen being a safe haven, we can always bet that the yen will prevail. And in this case, if the yen does prevail, we should see the kiwi decrease. And again, the kiwi has an interest rate decision being released, so that should only add to our confluences in fundamentally believing that the yen will be stronger than the kiwi. And the yen released their interest rates. Each interest rate they've released for the past 3 times has been the same. They haven't changed their rate. It hasn't got better and it hasn't got worse. So for that replicates nothing but stability. And, stability represents confidence, represents an economy that's maintainable. And right now, providing the New Zealand bank decreases their interest rate, that's going to paint a picture of the complete opposite to what the Japanese yen shows us. So for that reason, we are also bearish. The question is, where did we get into the trade? We can see up here these equal highs, perfect areas of opportunities to get into the trade. Here was probably the last call to catch the sell. So ultimately now we want to have a look at targets and see where the market is going to go. Now the market will come to around areas like this. This is where I can see an area of imbalances. This would also look nice on our Fibonacci coming to minus 27%. We could even look as low as minus 61%, or even down here to minus 127%. Why? We have areas of liquidity beneath. Okay, a liquidity pool is right here. If you was in a buy, your stop loss is beneath here. That's just now being clapped out. Okay, so we may get a pullback, but ultimately we do want to see the kiwi yen decrease. We want to see that decline heavily and come down, which can potentially be a trade that we're able to hold now for a few days, if not a few weeks. We can see this is a bearish formation. We've seen that price. Pay close attention to when you start to see price making a U-shape. When price is making a U-shape and it's slowly turning around, that is showing you that it's exhausted all of its avenues of being bullish and is now looking to be a big sell. So have a look at this. Make sure you have the same setups. Be sure to follow them. Be sure to reach out to us. We've got a free Telegram channel. We also have our website being launched on the 27th of November. This will give you more access to our information. But more importantly, make sure you're providing yourself with the adequate time to make your setups, to copy our setups, and to educate yourself, because every single day is money day.